Hello everyone, I am Dikshita. Now let's start how to prepare journal entries. First of all, we have to know what is meant by journal entry. Journal entries are very crucial part of accounting and they are used to record financial transactions in a company's accounting system. It includes the date of transaction, the accounts involved, and the amount debited or credited. First, let us know how to prepare journal entries. First, if you want to prepare a journal entry, you have to identify what are the accounts involved in a particular transaction, and then we have to know which account is debited or which account is credited, and the total debits and credits must be equal. And it also include a brief description of the transaction in a journal entry. This will help others understand the purpose of the entry and make it easier to find the future. First, we have to prepare working table for the given problem and then identify what are the accounts involved in the given transaction. There are three types of accounts. They include personal account, real account, nominal account. The personal account consists of accounts which are related to persons, and the real account consists of assets and properties. Nominal account includes related to income or gains and expenses or losses. After identifying the accounts involved in a particular transaction, we need to find out which account is debited and which account is credited. In personal account, we will debit the receiver and credit the giver. In real account, we will debit what comes in and credit what goes out. In nominal account, we will debit expenses and losses, credit incomes and gains. For example, let's take an example. In this problem, they have given journalize the following transaction in the books of Amrita, and they have given particular transactions on particular date and the amount. They include Amrita commenced business with cash, purchase of goods for cash, purchase of goods from Mohan on credit, and paid into bank, purchased furniture, sold goods to Suresh on credit, cash sales, paid to Mohan on account, paid salaries. Let us work. First of all, we have to create a working table. In that, the first transaction includes Amrita commenced business with a cash. So the particular accounts involved in the transaction are cash account and Amrita's capital account. Since cash account is an asset, we have to consider it as real account, and Amrita's capital account is an personal account since it belongs to Amrita. So here, Amrita commenced a business with cash. So, cash account is debited and Amrita's account is credited. That's why we have written here cash account as debit and Amrita's account as credit. And the amount given is 50,000. So we have to write 50,000 on both sides. Similarly, purchased goods for cash. It includes cash account, goods purchased account. Both are real accounts, and cash account is credited and goods purchase account is debited. Next, purchased goods from Mohan on credit. Mohan account, goods purchased account. Mohan account is personal account, goods purchased account is real account. Personal account, from personal account it will be credited and goods purchased account will be debited. Next, sold goods to Suresh on credit. Goods sold account, Suresh account. Similarly, we have to find out all the accounts for all the given transactions. After doing the working table, we have to go with the journal entries. We have to first of all we have to mention the date on which this transaction take took place, and then the format is debit account have to be written first, and then in the next line we have to write to and then start the account which is credited. So in first transaction includes cash account, Amrita's capital account, in which cash account is debited and Amrita's capital account is credited. So we have to write as cash account debited in next line to Amrita's capital account, and what is the amount included in it, 50,000. So we have to write 50,000 in debit and credit. Similarly, goods purchased account, cash account. Goods purchased is debited account, so we have to write it as goods purchased account debited to cash account, and the amount is 10,000. Similarly, Mohan account, goods purchased account. Mohan account is credited, goods purchased account is debited. Goods purchased account debited to Mohan account. Similarly, for all the transactions, we have to mention it like this, and then finally we have to balance both. We have to sum up both the debit and credit side, and we have to check whether both are equal or not. If it is equal, then your journal entries are perfect, and then we can carry on to next. In conclusion, journal account is very critical aspect of accounting. It helps to ensure the accuracy of financial statements, provides a clear record of all financial transactions. Without proper journal entries, financial statements can be misleading and inaccurate. This is important for auditing purposes and for tracking the company's financial performance over time. Thank you.